Hey everybody, welcome to the Spartan 101 for August 14th, 2020. Today we're going to be talking about reading the L2, how to use it to scale in, scale out, entries, exits, all that stuff. The whole point of Spartan, who's your broker? Oh, I'll talk about that later. But anyways, the whole point of this webinar, guys, is going to be L2 focused. So what I did this week is I recorded certain periods of time of me watching the L2 and when a chart was breaking out, breaking down into support. I did it on some low float stocks. I did it on some big caps. Basically anything with kind of momentum. I was recording the L2 so I could come back and show you guys what I'm looking at. Now, we'll talk about how to theoretically read the L2 because it's really not something I can teach you full well how to do. I can explain it to you, but you have to learn how to do it by experience. It's like understanding how to ride a bike. You can understand how to ride a bike, but you have no idea if you're going to be able to. Hey everybody, welcome to the Spartan 101 for August 14th, 2020. Today we're going to be talking about reading the L2, how to use it to scale in, scale out, entries, exits, all that stuff. The whole point of Spartan, who's your broker? Oh, I'll talk about that later. But anyways, the whole point of this webinar, guys, is going to be L2 focused. So what I did this week is I recorded certain periods of time of me watching the L2 and when a chart was breaking out, breaking down into support. I did it on some low float stocks. I did it on some big caps. Basically anything with kind of momentum. I was recording the L2 so I could come back and show you guys what I'm looking at. Now, we'll talk about how to theoretically read the L2 because it's really not something I can teach you full well how to do. I can explain it to you, but you have to learn how to do it by experience. It's like understanding how to ride a bike. You can understand how to ride a bike, but you have no idea if you're going to be able to ride. Like you're probably not going to be able to ride one if you just get on one. It's going to take you a little bit of time to learn because there's certain little intricacies and there's certain little things that you need to be doing while you're riding the bike, which can be explained, but it's really more of a reaction-based, behavioral-based thing when you're doing it. So that's what the L2 is. We'll talk about that today. I'll explain that to you in a little bit. But anyways, that's the whole focus of this webinar. So if you guys are new to these webinars and this is the first webinar you're watching, one of the things that you need to do is you need to go back to the beginning of all the webinars where any of the webinars basically in 2018, any of the webinars in 2018 where I talk about right at the beginning, you'll know it's the correct webinar because I'll go through the risk reward and I'll go through the fundamentals of my trading system. So I'll go through the time frames I'm using, the EMAs I'm using, et cetera, et cetera, et cetera. So the way that you would want to watch these webinars is this order. So like I just said, go over one of those first webinars that I've ever done. You'll know it's the right one because that's what you'll see at the beginning of it. And then you would want to go through like foundations of the technical trading system, raw technicals, chart patterns, trading the open / pre-market, trading intraday / scanning, and then behavior psychology routine, which is the one that we actually just did last week. And then you can pretty much go through the webinars in any order after that. So what we want you to do is get a good understanding of the technical system that I'm using. And then once you understand that, then you can go through them in any order, so to speak. So that's that. Now, this is a little bit more advanced webinar, like I said, because it's, the L2. Now, like I said, reading the L2 is more of a behavioral-based thing. Now, it's important because it allows us to see actually what's happening real time in terms of buying and selling. There's a little bit of gamemanship that happens on the L2. Sometimes people would put huge sells at higher prices or at a certain resistance price so that people start to sell before it hits that level. And maybe they take that sell off before it actually hits that level. So people were, convinced that, there's going to be a big seller up there, so I should get out of my position, which can cause weakness in the stock. They do the same thing on the buy side into supports. Sometimes you see large buys at a support level, and you can think that, maybe some fund or institution is trying to hold up the stock at this area. And if it gets into that area, if that buyer's still there, yeah, it can hold up. But if he's not there anymore, you can break through that level, and it just cause people to shake out weak hands on the short side. So there's a little bit of gamemanship that happens there. Important, like I said, because it allows you to see actually what's going on. I'll talk about how I look at the L2. Now, we want to understand this because when we look at a support level or resistance level, we don't really know whether or not it's going to break through that level or it's going to get rejected. The only way we can tell if it's going to happen is by looking at what's actually going on at that point in terms of buying and selling. It's just economics. Obviously, if you have more buyers than sellers at a resistance level to the upside, you should be able to break through it. If you have more sellers than buyers at a support level, you should be able to break through it to the downside. Now, the way to recognize this, we'll talk about, like I said, in a little bit, but it's based off of looking at the buying and selling actually going on at that point in time on the L2 and watching the time and sales. So you need to be looking at both things. L2 and time and sales, they should be right beside each other because your eyes are going to be staring at literally one and the other at the same time. Look at the buyers and sellers, and you're going to be looking at the time and sales to see what's actually going through. Now, certain brokers have better L2s than others. I know a lot of people have been complaining about the Thinkorswim L2, which I've seen it and it looks like garbage. I think one of the best L2s, some of the best L2s are, I think Interactive Brokers has a good one. E-Trade has a good one. DOS Trader has a good one. I use Quest L2. That one has a good one. Most platforms should have a pretty good L2. I think TradeZero has a pretty good one as well. I used to use them way back in the day. But basically what we want to do is we want to make sure that it's not laggy and it actually shows real-time data, because if it doesn't, it's useless. So this allows us, the L2, to gauge the momentum, whether it's dying down or it's continuing to speed up as we push to the upside. One of the things that we'll talk about is, I like to call it like the bid chasing the ask or the ask chasing the bid. That's the main visual way that I look at what's actually going on the L2. And the time and sales, I just look at what's getting filled. Mine's a little bit color coded. It gets filled on the ask, it's red, gets filled on the bid, it's green. In between, it's white. Kind of helps me a little bit just from that standpoint. But we want to use the L2 at support and resistance areas, like I said, to see whether or not there's enough momentum one way or the other to break through or get rejected. So the key places we technically want to use the L2. So resistance levels, peaks, downtrends, ranges, and EMAs. So resistance levels, support levels, valleys, uptrends, ranges, EMAs, and then during momentum moves, parabolic moves to the upside and falling knives. So what I mean by this is, let's look at something like, a good example was that NTN from yesterday, actually. So NTN yesterday, where am I watching the L2? I'm watching the L2 at certain areas. Specifically, where I want to watch the L2 is at these resistance areas for sure. So as the price is breaking through these levels, these peaks to the upside, pivot point, in this case, these are all peaks after that, I want to see what's happening on the L2 at that point. Is it getting rejected? Are we able to is there buyers coming in that level or sellers? And if there's buyers coming in at that level, we'll be able to break through. If there's sellers at that level, we'll get rejections like this. And I think I actually recorded this part and I recorded this part where it broke out, which is great. These levels are the primary places I want to watch them. Now, that's to the upside. To the downside, same thing. I want to watch it back into that support level. I want to watch it at EMAs being tested. I want to watch it at, like I said, supports and extensions. That's a good one to be watching at. And then just general momentum. So when I see a stock like this that's pushing to the upside, riding that 4 EMA, especially a low float stock that's up multiple hundred percentages, I'm pretty much going to be staring at the L2 the entire time I'm watching that stock, because that's what's going to indicate to me whether it's got more in it or not. A lot of the times what you'll see is the chart will push, another candle will open up and it'll show you a 4 EMA extension. But if you watch the L2, you start to see more buying and buying and buying come in. What happens is it starts to suck that 4 EMA back or towards that candle, so that it's not a true extension. We're not really going to pull back. And the hint, or where you would see confirmation of that, is just on that L2 as you see more buyers coming in, aka the bid chasing the ask, which again we'll talk about in a second. So those are some levels you'd want to look at. Other levels as well would be on downtrend breaks, right? So if you get the chart testing a downtrend, you want to watch the L2 when it's actually testing that resistance to the upside. Breaks that level, then you may see more buyers come in or not. And then obviously uptrends as well, right? Testing the uptrend, breaks the uptrend to the downside. What's going on in the L2? A lot of sellers starting to dump. Sometimes you'll see it, and then obviously you get a big continuation lower. So those are the those are the places I'm watching it. Support, resistance, trends, and then essentially, you can watch it at range breaks too, because that's technically a resistance level. And then just during momentum moves to the upside. So when we get some momentum behind the stock, you got to watch the L2. Tesla, the big caps are a little bit harder to decipher just because there's so much more volume going through. But certainly yesterday I was watching the L2, and I think I do have a little bit of a recording of this one, as it was pushing to the upside. So as Tesla was pushing, obviously we were watching that L2. And, just looking at it right now, these candles are huge, right? We're talking like 30 points, 40-point candles. So you can see how important it is. You can get a lot of insight to what's actually going on. So those are where we want to watch the L2. Now, how it actually works. Let's talk about that. So this skill is acquired through practice. Like I said, the L2, watching it is almost like it's a reaction-based thing. When you drive and someone's swerving into you, you automatically think to swerve out of the way or do this. It's the same thing on the L2. It's a mental, something kind of going on in the background. You can understand what you're seeing. You can explain what you're saying, which I always do. I try to bring it up whenever I can and talk to you guys through it. But it's something that you got to just continue to watch the L2 and the time and sales over the course of time at these support resistance levels to get the hang of. I can explain it to you. You're not going to be able to use it tomorrow if you've never used it. It's going to take you probably 6 months to a year to get the hang of it. It's just what it is, how it is. And one day it will click for you. And you'll go, oh, yeah, I get it. I get it now. So, like I said, I can show you the theoretics, but it takes practice. So what you should do is every day, have it up, time and sales, L2, watch it at those levels. Try to see what I'm seeing, or try to see what other people are seeing at that level. So, contains a bid and ask a certain price. Obviously, if we see more, and let me just bring up the L2. And the best way to explain it, I don't like talking about more bids, more asks, because sometimes we don't really know what's being filled, if it's a buy or a sell. Typically when you buy a stock, you're buying on the ask. Typically when you sell a stock, you're selling on the bid, right? Now, that's all dandy, but some people are getting filled on the bid, some people are getting filled on the ask, on buys, some people are getting filled with their sells on the ask, some people are getting filled on the bid. And some people are getting filled in between. I'm just going to pop up the L2 here. There we go. Let's do this. Edit. Get rid of the order entry, and we are good. The nice thing is, because the market's actually in after hours right now, we can look at something like SPY and we should be able to see some stuff. Anyways, so this is what the L2 looks like. Typically, it's going to be full to the downside. Let's see if we can find just something. Yeah, okay, so Tesla's like this. This is what it will look like, right, during the day, obviously. You get all these different venues, which don't matter. You got the bids, you get the asks, you get the size. So what I'm looking at is two things. I'm looking at the L2, and then I got my time and sales beside it, which I'm going to pop up right now. Let's just pop this. Typically, this is how mine's set up on my main chart. That's beside each other. I'm going to show you some video anyways. But this is beside each other. And what I'm looking at primarily is at these resistance levels. So let's say I'm looking at Tesla at 1606 yesterday. What I'll be looking for is the ask to be increasing and the bid to be chasing it pretty tightly behind it. So the ask is going to lead the bid to the upside at that level. And what you're going to see is a lot of fills going through on the ask. So if you start to see a lot of fills going through on the ask, oops, and this should be actually linked with Tesla. There you go. There's not going to be much going on after hours. But if you start to see a lot of the fills going through on the ask and the ask chasing the bid, then it should be bullish. We should see a break continuation through that level. Vice versa, if you see a lot of bids going through at that level, you're probably going to see rejection at that resistance because the price is actually decreasing and you'll start to see the ask chase the bid. Green means filled on the, I can't tell right now, but green typically means filled on the, I think on the bid on mine. And then, filled on the ask. and then the red is filled on the bid, and then the white is in between the spread. So when we see obviously more green, you would think, okay, it's bullish, right? When you see more red, you would think, okay, it's bearish, which when the ask is chasing the bid, it's bearish. When the bid is chasing the ask, it's bullish. What would this indicate? If the bid's going up in price, or the ask is going up in price, the bid's going to be chasing it, right? Because the ask is typically higher than the bid always. If the ask is chasing the bid, it's going to be bearish because the price will be decreasing. Bid will be falling, ask will be falling behind it. So anyways, that's visually what we're looking at when we look at the L2, and that's theoretically how we want to use it. One of the things that we must look at as well is just during momentum, what's actually occurring. Now, when we get tight spreads on the L2, the bid and the ask tighten up, maybe a couple cents or really tight, that typically is a bullish indication. That means that liquidity is high. That means that we're probably going to see, if it's bullish, we're going to see continuation higher. If it's bearish, we're going to see continuation lower. When the bid and the ask loosen up, that means that liquidity is dying down, aka volume is dying down, which means that momentum, whichever direction you're looking at it, is probably going to slow down, and you may even see a reversal. So definitely another thing that's important to understand there. Last thing I want to talk about is when you get big buyers or big sellers. You will see a big buyer on the bid, and you'll see a big seller on the ask. Now, what will happen is, let's say the price is at $16.50. You'll see a big seller on the ask at, let's say, I don't know, it'll be a much higher price. It'll be like $16.65. And it could be like, I don't know, it's Tesla, so like 5,000 shares or something. Now, when we get to that price, that 5,000 shares is most likely, well, it's not going to be a buy because, they could just get filled at a lower price. It's going to be a sell. And that 5,000 shares is either going to get filled, and you'll start to see it get filled, go 5,400, 4,200, 3,500, 2,200, and you'll start to see these chunks getting filled on the L2, which means we're eating at that seller. And if we can break through that seller that's bullish, we should get another leg up. Vice versa on the downside, on let's whatever stock, it could be Tesla again. Let's say there is a buyer at this level right here, at 1610 level. You would see, and the price was at 1630, and we're selling off. That's a buyer at that support level, 5,000 shares. We could go to that level, and right before we hit it, the buyer actually disappears, which means we can fall further because there's not as much buying support at that level. So recognizing where these guys are on the L2 is important, because we want to look at, and I always think of it as a wall. The wall is either going to be there or not when the price gets there. And if we can break through that wall, that's bullish. We can get the next leg up. If we can't break through that wall, we're going to pull back. Same thing to the, to the upside and to the downside. So without further ado, let's kind of look at some recordings here. I'm not sure how this is going to work altogether. I tried to go through a couple, but I think it should all work out. Let's see. Yeah. Okay. Let's see what this looks like. Okay, cool. So this is the software I typically use actually to record my stuff, but let's see if I can get it a little bit bigger. I think is that big enough for you guys? Can you see it? If not, I can try and blow it up a little bit more. So this was Tesla basically pushing to the upside. And this is kind of a momentum example. So we got a flag break intraday. I'm watching the volume on Tesla right now, obviously, watching the L2, watching the ask chasing the bid to the upside. You can see how the ask is increasing, bid following it to the upside, which is representing and showing us momentum. And we know that it's got room towards 1550 on the upside. So basically, I'm just watching to see whether or not that momentum is sticking with the chart. And I'm doing this all day, guys. Like when I'm talking to you guys about, there's momentum here, there's momentum there. Primarily, what I'm looking at is the L2. Now, Tesla, like I said, it's a little bit different because we're looking at a big cap stock. It's going to look a little bit different than a small cap. We'll show you examples in a bit. But the primary thing that I'm looking at, like I said, is the ask is being chased by the bid. Ask is increasing, bid's falling behind it. It's Tesla. It's a $1,500 stock. The spread's pretty tight though on it. You can see how tight that spread is, and we can see the orders being filled. And let's just kind of go forward a little bit here. That's a good little. So this is one of the examples I wanted to talk to you guys about, which is right here. When we get the next candle opening up, we get a 4 EMA extension. Hear me clicking. Guess how much is that? So next candle will open up, I think right here. There it is. So 4 EMA extension, but we still have buyers coming in and the ask increasing, which shows you that it's not a true 4 EMA extension. Of course, the candle would have to close for it to be a true 4 EMA extension, but sometimes you can do that scalp to the downside. But this is showing us that there's more momentum behind it. Ask continues to increase. It continues to chase it, even though we're extended into that 1540 resistance, which is that last high of the candle, which I'm definitely going to be staring at the L2 at that area to see if there's buyers coming in. See, there was a little bit of a seller at that level. Buyers are still pretty, hammering it pretty much. Ask continuing to chase the bid. Ask breaks through the level. Bid chases through it. Break through the next level and, get the next little leg up. So we're using the L2 at these levels to see what's going on. This is what's telling me, are we going to be able to break through the level or not? Now, when you watch the L2 for a long time, it just becomes reaction-based. You just know, like, oh, okay, that's what's going on. I'm going to do this in conjunction with it. But, that's a pretty good example there. I want to show you guys some low float stuff. This is all Tesla, some momentum. All right, here we go. IGC. So IGC extended here, and you can kind of see on these smaller cap stocks, obviously the size is a lot bigger, but you can see how much more sellers there are on this thing. Look at all the fills being filled on the bid. I'm going to go back here a little bit. So we're extended to the upside 4 EMA extension, and start looking at the sells going through on the bid. Look how much bigger they are than they ask. And this is just at this point in time. 8,000, 6,000 versus 4, 7 versus 5, 6 versus 7, 7, 13 just went through, 5 just went through, 8 just went through, 20,000, 22,000. Big seller just went through, 12,000 just went through. You see that? And it pulled it back down. So when we're looking at small caps, we're looking at kind of the size versus the size on the buying side versus the size on the selling side. That's kind of the main indicator. Now, what you'll see a lot is a lot of gamemanship too. You'll see a lot of orders that come in and get canceled. That's why we're using the L2 to see whether or not these big orders actually get filled. Sunset, can you show L2 example on the option side? I actually don't have any recorded because it's not as important. Because options move based off of what, Sunset? Do they move by themselves, or do they have to move with the underlying asset, right? So it's all based off of the stock. Yeah. Spartan, can we tell if these are buys or sells? Well, think about it, Pre. If a big order is being filled on the bid, and the price is extended to the upside, what do you think's happening? And the bid then drops down. It has to be a sell. It has to be a sell. So what we're looking at is on the bid side mainly for sells, on the ask side mainly for buys. When you buy a stock, where are you going to get filled right away on? You're going to get filled on the ask or in between, right? When it goes in between, it's a little bit harder to tell what's going on. But the best way to look at an L2 is watch out what's chasing what. What is chasing what? If it's being chased, if the ask is chasing the bid, keep it super simple, bullish. Bid's chasing the ask, bearish. More fills going through on the bid, probably selling. More fills going through on the ask, probably buying. Anyways, let's move on here. Is there a way to speed this up a little bit? I guess I'll just drag it. See what happens. Okay, I like this. Yeah, this is good. So there's a little bit of seller at this level, and then buying starts to come back into IGC and then into the high of the day, which is a really good way to be watching it. So you can see, okay, let's go back. So right here is where you start to see the larger size coming in on the ask. 11,000, 12,000, 10,000, 10,000, 7,000, 4,000, 3, 7, 48,000. See that? Right at the 2 level. See how fast this goes through, guys? That's why it kind of like second nature. So watch the ask at $2. Huge buyer went through. And there's actually 2 buyers there. Let's see if we can actually pause it on that level. $48,000, $46,000, and then $11,000 at 201. I wish this goes through so fast on the time and sales. I don't even think we can be able to catch it. Let's see. Yeah, it goes through so fast it doesn't even catch it. But anyways, so you can see how large of a buyer that came in at that level that pushed it through it. Most likely a market maker that's probably not retail. These are the guys that will play games at certain levels. So watch it at the 205 level. There's going to be a little bit of selling that kicks in here. $7,000, $4,000, kind of, you can see the bigger size going through on the sell side, but they're trying to hold the 2 level. Then they push it through. Buyer comes again at the 205s, which I'm going to show you in a second here. This is all happening within like seconds, guys, right? And whenever we say there's a battleground at an area, you usually are seeing the same sort of buys and sells going through at the same price level. So this is a little bit of a battleground. You got 8s, 8,000, 8,000, 8,000 kind of on both sides. It is holding above that resistance point for now. I think the buyers are stepping in more. Bids are starting to lighten up a little bit. And obviously, that's indication of a breakout. And you can see the corresponding pop in the candle when it goes through. Yeah, absolutely. So you're looking at three things. We're watching the L2, time and sales. This is why everything's beside each other. And I'm watching obviously the chart, right? Good question. Can we use the L2 to see choppiness, i.e. buyers and sellers that are not in control? Well, what you can look at is the main way you recognize choppiness is you look at a chart within a range and you see no liquidity or smaller amounts of volume, and that would indicate choppiness. So what you'll see on the L2 is probably larger spreads. You'll probably see, the same sort of buys and sells kind of going through. And you'll see at resistance levels, no buyers coming in and just sellers. And at support levels, you'll see the same thing, but inverse. All right, let's just zoom ahead on this thing. Coming back to Tesla, this area. At the resistance, which breaks through, asks chasing the bid. Bullish indication. This is a good one to watch right here. Another extension. There you go. So you can see on the extension, the buyers are still coming in, kind of hammering it to the upside there. Anyways, so that's that for this one. I think I want to see if there's this one I want to show you some topping that kicks in when it starts to change on the momentum side. So this is coming off of an unhalt. Look at the L2 and kind of how it's stacked on the sell side right now. 32,000 at 236. Not really much on the bid. And you can see that these on the ask, these higher that gets filled right away. These higher at 40s, these are probably sells as well. And obviously that 32 got filled it, pulled it down. Looks like there's a buyer at 22. Again, this is about to get halted. Any idea how I recognized it was about to get halted? There? And it should be halted now. Yeah. Now it's halted. You don't see anything going through on the time and sales. What happens is you'll see the time or the bid and the ask stay the exact same level, and you'll just see orders just going through on those levels, price not moving. You've probably got about 10 seconds or 15 seconds until you actually get a halt. So when you see that, if you got a position, you can just exit the rest of it. All right, so what's going to happen is it's going to come off the unhalt, and it's going to immediately almost get halted again. So like I said, what you'll see is the price stay the same, but you'll see orders going through for a couple seconds, like right here. See, price staying the same, orders are going through. It's going to halt. And it's halted. So that's how I know if something's going to halt. That's just what I'm looking at. Nothing, it's not, no one ever taught me that. It's just something I just watched on the L2 and I recognized it. It's not super complicated. So that's that. Let's take a look at another example. Let me just see if I can find it. today. Open up.
You don't mind?
So this is pre-market. Same thing, except the L2 is going to be a little bit wider in terms of liquidity because there's not as much in the pre-markets. But you can see the same thing, ask chasing the bid at this resistance level. Eventually, we'll see what will happen. So one thing to recognize is this, and I don't know if did you guys catch that? What just kind of happened there? Is there a way to just like, I want to click like next, so I can just play it by frame. So the bid and the ask are spread apart, and then they tighten up, and that's when we get the next leg up. Bid and ask are spread apart. Watch when it tightens, and you immediately get a jump in price. 48, 49, and then you get a jump. So typically what happens if you got momentum one way or the other, if you get a little bit of a spread, and that spread typically, and when it starts to tighten up, you tend to get your next leg up right after that. You get your push. This way, it pops through that high, and then obviously you start to see a little bit of topping. I want to go to that. Oh, sorry, go. This little, like I keep talking about this kind of 4 EMA fake out, which is super important. Because the next candle will open up and go, oh, it's extended. But you have to watch the L2 because this gives you the indication if it's actually extended or not. We know that it's extended. It looks extended. But looking at the L2, we can see that there isn't really any sellers going through, and you can see that the ask or the bid's chasing the ask once again to the upside on this extension, which would indicate and should indicate that we're going higher. So they're holding it at the $12 area. Even though it's extended, you would expect it to start pulling back below that area much harder. Zoom up because this kind of lasts like a little bit. And obviously, bid or ask starts chasing the bid, or bid starts chasing the ask again to the upside. Big resistance at 1250. Pre-market high, break through that, starts to push hard. Again, ask chasing the bid, or bid chasing the ask, sorry, into the highs. And then I think what we see is some topping here at that resistance level. Seeing the sellers coming through a little bit bigger size than the what's going through on the ask, indicating that there's a little bit of a switch in momentum. And obviously the ask starts chasing the bid to the downside. You see your 4 EMA extension, you go, okay, this looks like it's a real 4 EMA extension. You can scalp this to the downside. And you should see this thing start to come in. So $12 is kind of like the support. You can see them trying to defend it, and obviously it breaks and it kind of snaps to the downside. Ask continues to chase the bid lower, which indicates, yeah, we're probably going to gap fill. And here you're just going to see an acceleration of the sellers, and you're going to see the buys dry up a little bit. Yeah, you get a little bit of a pullback there. Ask continues to chase the bid, pulling into the 4 EMA, and then essentially it taps it and it fills the gap, and then after it fills the gap, which I kind of want to show you, this is when support starts to come in, aka buys start to come back in, and the sells start to stop. You can see the sells are getting lighter, and the buyers are coming back in. Which would indicate a bounce, right? So that's fascinating. So when you're talking about it being extended during the day, you're always paused for a second. Yeah, I'm always watching the L2 on the extension talk to see exactly what's going on. Because I don't know whether or not it's a real extension, it's a fake extension. If you want to wait for the candle to close, then you got a 90% probability pretty much of the reversing. You don't even have to watch the L2. But I like to be a little bit early, right? If you can get a little bit of an edge on the L2, then why not use it? So that was TLC today. Let's see what else I got. I think NTN. I got a couple NTN ones from yesterday. Let's see. I have no idea what this one is. Is it short? Yes, this one's short. Reversal. This is why I was recording this one. This is a momentum reversal on the L2. This is what it looks like. So similar to what we've been talking about before, you'll start to see the buys on the ask slow down. Ask is going to slowly stop chasing the bid. You're going to see an extension here. Then you start to see sells coming on the bid. Ask starts chasing it to the downside. So we watch this right at the last candle high. Bigger volume coming through on the bid. There we go. Here's the high. Now watch the bid side and the ask. You can start to see a little bit bigger orders coming through on the bid side compared to the ask, which would indicate probably selling orders. Should start to accelerate here. There it is. Around, I think 750, there's a huge order that goes through. Let's see if we can fucking pause it on it. So quick. Yeah, it doesn't even show it on the system because it happens too quick. But there's a large sell at the 755 that goes through and it pulls it all the way down. It's probably a market order. Yeah, it's a market order for sure. It's just a ton that goes through on the L2, just gets filled, which obviously is what then starts causing this reversal back to the downside, filling that extension. So, obviously we're watching support resistance levels at that area. Now let's take a look at, let's see a earlier version of this one here. Open. I missed it right at that resistance point. That's what I wanted to record. Well, this is a good example, I guess. This is kind of prime time when you'd be looking at this, right? Oh, whoops. So right into this resistance level, right when we start testing it. Oh, what the hell? It's not done. There you go. So right at this level, this is where you're going to be watching the L2 at that 649. So what's going on here in terms of the L2? What is going on in terms of the bid and the ask? Is the ask chasing the bid here? Is it battleground? Right now, it's obviously battleground. You can kind of see that staying in the same place, same sort of sizes going through on both areas. And you can also see that the bid and the ask aren't tight like they were before. You kind of got a little bit of a spread. In some instances, 4 cents, 5 cents, 3 cents. It's not super tight, which is showing you that liquidity in one direction is not there. So there's a little bit of indecision occurring. So this would just indicate, at this point that there's a battleground at that resistance level. There's a seller around this area or sellers that are coming in, which is causing the price to pull back down. Now, this doesn't necessarily mean you get out of the stock. If you start to see, it sell off more and maybe break the 40 EMA, then I would go, yeah, maybe it makes sense to exit your position. This would just be on being patient and watching the L2 to see when a buyer comes in to break us through that resistance level, or a big seller comes in to break us back down. But this is the levels where you're going to be watching that resistance, right? To see, is there enough volume going through on one side to push us higher or not? So you can see that, right here, we pushed back into the 640s for a second there, and then a seller came in and pulled it back down. That was, again, a market order going through. And let's go through the last example. Let's just see what that one looks like. NTN round 2. Okay, good. So I did get the breakout here. This is what I wanted to show you. And going through that level. So as it's breaking through the level, you can see obviously the ask or the bid start to chase the ask again to the upside. This level is still a battleground. You can still see some sellers at that 650 area. But ultimately, the buyers are outweighing the sellers that are coming in at this point, which is allowing it to push. Next resistance right now is 675. That's why I placed it there. So you can see and understand, why is there sellers at this point? It's another resistance point to be watching. Large sells again on the 650 area. Buyers come, bid chases the ask through it. Next candle is going to open up on an extension. Now this is where we watch the L2 to see what's happening. More buyers and sellers or not. In this case, you can see that there's about the same amount, which is keeping the price pinned at this area. So again, battleground well extended. You start to see some buyers come in here again. Whenever an extension fills, it's bullish. Or no, oh, sorry, whenever an extension holds its level, guys, it's bullish because it's extended, but there's still buyers at that area holding that extension to the upside, which indicates momentum. Which, you know, further is going to be confirmed by the L2. So gaps filled, obviously, at this point. Buyers coming in again, push it through the $7 level. Large buys coming through on the ask. Spreads, you can see it's tightened up again, really close together. Indicates momentum. And then this is kind of where the top is, I believe, on this NTN. It's unable to really hold through that 7 level, and I think it starts to sell off after a little bit. So this is where it starts to get tired at that 7. Buyers start to slow down. And when you start to see that, then you start to see, okay, there's probably a shift in momentum, which, you know, makes sense. And then you'll start to see it, you know, come back in a little bit. Is there a way to identify short selling using the L2 and time and sales? So short sells, Raul, if they want to get filled, they're going to have to get filled on the ask most of the time. Or sorry, on the, No, on the bid. They'll be filled. They'll be filled on the bid if they're short selling. There's not really a way to see what's going on, but if they're getting filled on the bid, it's going to pull the price down typically. Is there a way to identify short? Can we rewind the video on the web page once it's recorded? Like just go back just a bit. Like you talking now, Raul, or are you talking whenever post this recording? When you go, oh yeah, of course you should be able to rewind it. Oh yeah. Anyways, so using the L2 guys at these areas, hopefully this is the only way I really know to show you guys what I'm actually seeing is kind of to go through it and explain it. First and foremost, do you guys have any questions in regards to kind of what we've talked about so far? I think it's so simple when you see it, but when you try to apply it, it's a little bit more difficult because you're on your own. You don't have me telling you what's going on, but hopefully you can understand from these explanations. Oh, well, that's, Spartan was telling us this is what's happening when we see this. Oh, I can see that's what's going on. The more you use the L2, the more you're going to get used to recognizing these patterns, because realistically, trading is all pattern recognition. This is just one more pattern to recognize. Might be not on a chart, but it's using numbers. When I'm looking at sizes, are you looking at the nearest price levels on the bid and the ask? Yes. Does the L2 work best with the 10-minute? It doesn't matter. L2, you can use it with a 1 minute. You can use it with an hourly. It's going to be going through the same amount. L2 has nothing to do with time frame on the chart, Bishop. I just prefer to use a 10-minute chart overall. Price is going to do what the price is going to do. So using the L2, guys, pretty much at resistance and support levels, when we're looking to, if we're wanting to use the L2 to add into a position or scale out of a position, what we're looking for when adding into a position, if it's a long position, we're either breaking to that resistance level, you're seeing more size coming in, getting filled on the ask, and you're going to see the bid chase the ask to the upside, which is going to it's going to demonstrate momentum. Now, vice versa, if we're looking to scale out, what we're going to see on the long side, what we're going to start to see is bid and the ask sizes kind of look the same. You're going to start to see the bid and the ask kind of stay at the same price, and you might start to see the ask start to chase the bid a little bit to the downside. When you start to see that momentum's dying down, it's time to start scaling out your positions. So whenever I'm looking at a chart, I'm not looking at, okay, at this resistance point, I'm either going to sell it there or buy it, sell into that resistance point or nothing. I'm watching the L2 to see, okay, what's going on in terms of the momentum? Is momentum slowing down? Does it start to make sense to get out of these positions? Can it be filtered to show only larger orders? Yes. You can filter it on, anything that any platform, you should be able to filter the sizes. 500, 1,000, whatever. I'd probably go 500 to 1,000 minimums. The only issue is when you look at big caps and small caps, it's going to be different, right? You look at an Amazon, no one's filling 10,000 orders, right? They would be filling hundreds and stuff like that, lower. But anyway, that's primarily how we use the L2, guys. Like I said, there's not a ton to go over here. It's more so just explaining what I'm seeing at certain points. There's only a couple different places to be watching it. Like I said, support and resistance levels, and then when it's slowing down or speeding up on momentum. Add into it when you see momentum, you see it slowing down, that's indication to start selling it. That's primarily it, guys. So large orders on the bid size indicates sells. Yes, Ilian. Unless that large order on the bid is below the bid price. Like if you see on the bid a huge order at like 718 and the stock's at 735, that's probably a buy. Or that is a buy, sorry. Because obviously if it was a sell order, it would have got filled already. And then vice versa on the ask. Or sorry, if it was a buy order, it would have got filled already because, Or sorry, if it was a sell order, it got filled, and that would it would indicate a buy order. Vice versa on the ask. If you see a large order way above the price, it's probably a sell order. Because if it was a buy order, why wouldn't they want to get filled lower? And you would get filled lower. It just automatically would fill. Can you update us on scale in, scale out strategy? Well, that leads me to the next part of this slide. Bala. Scaling signals and confirmation using the L2. So we can also see large sell orders on the ask that might get eaten through as it goes through higher. Yes, Finny. And what will happen is there'll be large ask orders way above the price. It could be 5 cents, 15 cents, 10 cents, whatever. But those will be sell orders there. And if those get eaten up, then you're going higher. That wall gets broken, essentially. So scaling in, kind of a quick little recap here, just because I wanted to go over it as well. But morning L2 confirmation, trend confirmation. So in the morning, basically, we're using the L2 primarily to add in positions and looking at the trend. I always like to say within 30 seconds to 60 seconds, if the trend's holding, add into the position, whether it's going up or down. If we're trading intraday, range breaks, you tend to want to add into those. Scale in on previous day high breaks. Those are always good for low float stocks. But range breaks intraday are a good area to add into a position. As long as the risk reward makes sense, you have to have room to the next resistance point to add into the position. I like to add in on flags as well. So when you get a flag breaking to the upside, that's a good place to add into a position. Again, watching the L2 to see whether or not that you're getting buyers coming in on that flag break. A lot of guys like to add in on pullbacks into the 8 EMA, 13 EMA, 50 EMA. So basically you're adding into an uptrend. Those are okay areas to add. I'm not a big pullback add. I'm a momentum adder. Trend breaks on the hourly, daily, intraday. So basically breaking a large trend, you can add into a position. EMA crosses, specifically the 50 EMA. You take a stock off the bottom, 13 EMA, and then it crosses the 50 EMA to the upside. So let's say you took the stock, on an inverted head and shoulders long, crosses the 15 EMA to the upside. That's a good place to add into the position because that's a huge regain of support. After hours, in terms of adding, it's all based on momentum. So if you got momentum and room to the upside and the L2 showing you that the bid is chasing the ask, that's where you'll want to add into it. Scaling in using the L2. So this is kind of what we just talked about. Literally exactly what we just talked about here. But the one thing to always think about still is, setup, risk, reward, volume, L2. So what's the setup? It could be momentum. It could be a flag break, a range break, whatever. There has to be some sort of setup. The risk reward still has to make sense. You still have to make sure you have room to the next resistance on the upside. You need to make sure there's volume behind it, which you're going to see on the L2, the time and sales, and on the chart. All those things make sense. Add into the position, to the upside or to the downside. Adding in swings. End of the day, the thing about L2, guys, is it's used for day trading. It's not used for swing trading. But if you're going to be adding in on swings, end of the day strength, closing at highs on the hourly, that's where you want to add in. Closing at lows on the hourly, if you're going short, that's where you want to add in on the short side. Keep it simple in terms of the adding. So a couple different patterns that we just talked about. So let's say you enter a flag, you can add in on the inter-flag range break to the upside. That's a good place to add. You enter a flag break, it starts to push or breaks the range to the upside. You can add in on that setup. These are actually setups to add into, not just momentum. It's curling 13 EMA curl to the upside. Once you start to break back above that range it was trading within off the lows, you add into it when it breaks that range to the upside. Get a double bottom. You start to break back above that range it was trading within off the double bottom after it bounces the second time. Add into it there. These are bullish places to add. Every single time on these setups, you're going to be watching the L2 at these areas to see whether or not buyers are coming in to chase that, the bid's chasing the ask to the upside through that level. And there's enough volume coming in through the L2 and on the time and sales to break those resistance points. Same thing on the downside. If we're going short, bear flags, add on that bear flag range break, intra-flag range break, sorry. Bear flag and selling off. You take it on the range break to the downside. You add in on the low of the day break. Curling to the downside, 4 EMA or 30. This could be a 13 EMA cross curl to the downside. Starts to break the range it was trading within. Add into it there. Double top, same thing. Add into it once it breaks that range it was trading within after the double top. Again, watching the L2 at these areas. Now, theoretical steps in scaling in, like I said, enter your starter, risk reward, set stops, confirmation. You get your signal to add, which could be any of these. At that point, you're watching the L2 for confirmation, watching the volume for confirmation. You get your confirmation, you add, and you adjust your stops. Steps are pretty straightforward. Scaling out steps, same thing, except now we're looking at a few different things. Resistance and support levels. We hit a peak, we hit a valley. We're watching the L2. Is there sellers coming in here or not? I want to sell into peaks and valleys before they hit those areas anyways. And then I'm going to start looking at the L2. If more sellers come in, I'm exiting. Watching the L2 itself for a change in momentum. Reason to exit. News, obviously, bad news comes out. You want to exit your position. Trend test, daily or the hourly. So going into more resistance levels. Bigger term trends is what I'm trying to say here. Exit into those areas. Scale out in those areas. Extensions, 4 EMA extension. Watch the L2. Is it a real extension or is it a fake extension? If it's a fake extension, well, don't get faked out. If it's a real extension, candle's going to close. You're probably going to pull back. Profit targets, obviously, always take some off there. Time, if there's only 10 minutes left at the end of the day, guys, should you be exiting your positions? If you're not going to be overnighting, heck yeah. And then obviously volume slowing down, which we'll know by watching the L2. This is just a chart, an example of me scaling and scaling out of positions based off of the L2 and watching it at support and resistance levels. The best example that I have that I actually did recently was that UONE that I have on YouTube. It's good. It's a good example to watch. Like literally, that whole scalp trade that I did on it was just watching the L2 and scalping it based off of volume within a tight little range. So, like we just talked about, scaling in and out using the L2, way to manage. Quick little reminder, trend holding in room, add, keep it simple. Assess the market choppy, stay smaller. Always remember that. Like today, it made sense to be smaller than even normal than what we were doing with lotto size because it was choppy. Scale out, again, keep it simple. Momentum's dying, trends changing, resistance and support, take pieces off, trend breaks, take majority off. You break the 4 EMA, especially if you're trading options, guys, you want to be getting out. Topping or bottoming on a chart, aka momentum flip, start exiting your position. Volume slowing down, we talked about that. If you're scalping or just trading options, 50 cents to $1 to the upside, you want to start exiting a piece at least. You always want to pay yourself something if the trade's working. Like a Tesla going up $1 is nothing. I mean, relatively speaking, you probably want 10 points minimum. But any option trade, if it's going up 50 cents to $1, you probably want to start taking some off. The more expensive the option is, if it's like a $5 option, obviously you're looking for like $1.50 to $2. Probably to start scaling out 25%, 30%, something like that. Anything smaller than 50 cents to $1 move is going to be like a 50% to 100% move. So that's where you would want to be taking stuff off. So use your checklist for these things in terms of the scaling up in and out. So the reason why I wanted to recap that, because the L2 is used a lot for scaling in and out. We went through obviously examples when we were looking at it, but there's some further stuff there. Anyways, guys, so that's what I want to talk to you about today. This webinar kind of flew by, which is great. But yeah, hopefully that gives you a little bit more insight. I've never done that before in terms of that much detail on the L2 before, because I didn't think that I could explain it as well as we did today, which I think it was a good thing. Spartan, I have a good question. I have a question about breaking in the trend versus 13 EMA as support. When there is a lot of momentum, usually the stock follows the 4 EMA on the trend, is above the 13. Should I exit? So yes, when a stock is in momentum, what I would do first and foremost is watch the trading momentum webinar, because I explained this. When a stock is trading along the 4 EMA, Leonidas, it's a momentum trade. You exit if it breaks the 4 EMA, most of your position. If it breaks the 13 EMA, position's done, you're out. You use the 13 EMA to stay in a position longer. But if you're trading an option, it may not make sense to get out of the trade if it breaks the 4. When would it not make sense to get out of the trade? If it's a longer dated contract, you have more time to expiration, then you're not going to get as much decay. If it's a Lotto Friday, for instance, you're going to get decay right out the gate, and you will want to exit once that momentum's dead. Just like, every single trade this morning, pretty much we're out of the entire position right after the momentum dies down. Yeah, we keep a piece on because it's Lotto Friday, but we're out of most of it once right when that momentum's down. And that has to be automatic. The further you are away from expiration, the more you can give it more time and more room. Alrighty? Alrighty, guys. So that's it. You guys have a good weekend. Yeah. If you guys have any questions, feel free to reach out. I'm going to get this uploaded pretty quick. Hopefully the recording worked on Zoom. I think it did. And yeah, see you guys on Monday. Any questions, feel free to reach out. Thanks, guys. Have a good one.